Welcome to the Daily Update Podcast, where I'll go over the action in the market for Wednesday, July 2nd, and we'll see how things look for Thursday, July 3rd. Going over what happened in Wednesday's session, the S&P 500 powered to another new all-time high, gaining 0.47% and closing just shy of the R2 pivot at 62.28. The index climbed above its daily pivot at 61.96 and R1 at 62.13, supported by above-average volume, signaling stronger conviction behind the move. The NASDAQ and NASDAQ 100 also posted gains, setting new all-time highs, with growth stocks taking the lead after a brief defensive tilt toward value stocks on Tuesday. From a technical perspective, the market remains robust across all time frames. Short, intermediate, and long-term trends are positive, bolstered by recent golden crosses in the S&P, NASDAQ, and NASDAQ 100, a bullish signal. Short-term indicators, including the Stochastic RSI, Williams %R, CCI charts, and Stochastics, still remain strong, but are approaching overextended territory, hinting at potential consolidation. Intermediate-term indicators, including the RSI and CMB composite, are also positive but showing some extreme readings. Long-term oscillators are improving, though not yet turning positive. Switching over to the economic data, the ADP employment report surprised to the downside, showing a loss of 33,000 jobs against an expected gain of 97,000, the first negative print in some time. Meanwhile, mortgage applications rose by 2.7%, a positive sign for housing demand. The markets largely shrugged off the weak ADP data, keeping their focus on Thursday's critical employment report. Looking at the different sectors, sector performance was led by mega caps and small and mid caps, with tech stocks driving the charge. Small cap indexes, including the S&P 600 and Russell 2000, along with mid-caps, are trading above their 200-day moving averages, reflecting broad-based strength. The energy sector saw a notable bounce, while healthcare, utilities, and financials slightly underperformed. Looking at geopolitical and political developments, in Washington, the big beautiful bill continues to spark debate in the House, with some Republican pushback over its costs. While consensus leans towards eventual passage, it may not happen by July 4th. On the trade front, a new deal with Vietnam was announced, granting the U.S. zero tariff access, a potential boon for exporters. Geopolitically, concerns continue to linger about possible escalations between Israel and Iran, as well as Russia and Ukraine over the holiday weekend, though hopes remain for a calm Independence Day celebration. Looking at market sentiment, despite Wednesday's gains, market sentiment ticked slightly lower, possibly due to pre-holiday hedging. The VIX remains subdued, indicating lower volatility, while risk-on sentiment is evident in rising high beta to low beta ratios, pointing to investors' confidence in growth-oriented assets. Looking ahead to Thursday, July 3rd, the markets will close early at 1 p.m. Eastern in observance of the Independence Day holiday, with a full closure on Friday, July 4th. Economic reports will shape the shortened trading session, including initial as well as continuing jobless claims, the big employment report, ISM non-manufacturing, and factory orders. These releases could drive significant market moves, particularly given the weak ADP report. The markets remain bullish across all time frames, supported by technical strength and leadership from growth stocks. However, overextended indicators suggest caution as a pullback or consolidation could always be on the horizon. Seasonally, early July is historically strong, especially for the NASDAQ, with post-election years averaging a 10.7 return for the third quarter. That said, slight weakness is typical around July 4th, with strength often resuming until mid-month. As far as the key risks, investors should monitor potential geopolitical developments, reaction to the big beautiful bill, and the employment data for signs of volatility. While the market's bullish trend remains intact, these factors could introduce short-term uncertainty. In conclusion, Wednesday's market action continued to underscore the bullish momentum, driven by technical strength and growth stock outperformance. As we head into the holiday shortened session on Thursday, keep an eye on key economic data and stay mindful of overextended indicators. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.